Hello, 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 everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino. Going to get through a quick introduction and bring Bob on quickly since he has a shortened session today. Hello, Waka Waka. Hello, Wavy. Glad it all worked out for you today. Coco thinks J Powell looks miserable today. Good evening, Anissa. Waka Waka thinks J Powell lied through his teeth today. Patrick, good afternoon. Hi, Alan. Welcome to the channel, Alan. So, real quick, just to recap, we had Powell talking today. What else? We had these PMI flash numbers coming in really bad, still slightly in expansion, but these were a big miss. We can talk about that later, too. Kansas City was down pretty substantially, and the Fed manufacturing index in contraction. Oh, by the way, the banks just passed the stress test, so everything's good. There's your heat map today. The mega caps again were pretty much leading. Oil got destroyed. It was a pretty choppy day. FOMC still 95% of the 75 basis points and still a negative gamma. By the way, FedEx after the close released earnings and was up with a gap that gave us pretty strong forward guidance. All right. Hello, Ted. By the way, if you're new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term subscribers, please come back and leave some comments. And with that, I am bringing on the one and only Bob Iacchino. How about that for a fast intro?
That was a really fast intro. I'm going to leave you the rest of the time because I've only got like 15 minutes today. So the two things I wanted to point out today is I think Waka Waka, I think Jay Powell was half lying. Okay, where he says our goal is not a recession and it's possible to bring down inflation without a recession. Those two are stretches of the truth, if not lies, if not outright lies. But the thing he was telling the truth about, hopefully, was his unconditional fight against inflation. He said he had all the news stories have a quote or quotes around the word unconditional fight against inflation. And the Fed is strongly committed to bringing about price stability. So that means that the data that we're getting doesn't matter as much. They say they're going to be data dependent, but the data they're going to be looking at is inflation data, not the jobless claims data. Cue the chart.
Okay, hold on.
The jobless.
I
The jobless one. Jobless claims are rising. Somebody asked us about that. I believe it was on Tuesday. I think it was Sterling. I think Sterling asked about the non-farm payrolls number. I'm sorry, the unemployment rate in the non-farm payrolls number.
here's jobless claims.
All right, so here's the weekly jobless claims, and you can see the trend since basically April. Okay, now obviously there's dips in there, but if you look at a chart, we can't draw trends along the bottom like we normally would. But if you look at a chart, there's dips on trend lines as well. They're not, you just kind of go along the lows or the highs to draw your trend line. Not every single one is running along the trend line, but you can see a clear trend here. And the dominant trends going back to August of 2021 were down, right? There's a little spike and then another downtrend. But now we're entering a bit of an uptrend, and it's a steady uptrend. That's worrisome. This is the jobless claims number. Then we also have the JOLTS jobs, the jobs opening charts. Okay, so you can see all through last year as we coming out of the pandemic and businesses were reopening, we saw straight up in terms of job openings. And now it's flattening out. And there are some people that question those jobs opening figures as to the validity of them. I think they're real. We had people in our chat, members of this particular room, I'll call it a room, have said they've seen job opening signs in their own industrial parks where they work. Somebody talked about being in home remodeling and he booked out 6 months. So it's still an uptrend, but it's flattening out. Again, these are JOLTS jobs opening. Now, here's the troubling one. The troubling one is the PMI chart, and this is the market PMI, not the S&P PMI, which we just saw. Now, we haven't gotten these next set of numbers yet. Okay, the most recent ones we've seen have been the first estimate for May. We should be getting the June one soon. That is a solid downtrend, and I could have drawn a second one that was even steeper along those last 6 or 7. This is composite PMI, so manufacturing and services. It's the best view of the whole economy, but really when you look at the services PMI in the US, which we are a service economy now, I don't have a chart for that one. That was the weakest of all of them. It's 51.2, I believe. Don't quote me on that exact figure, but I believe it was also the biggest miss here in the US. And you have similar charts on the UK and on the EU. So what does that mean? Yeah, it was 51.6. It was expected at 53.4. I'm sorry, the last was 53.4. It was actually expected to rise to 53.5. That's the service PMI. Now, the PMIs we saw this morning are the S&P ones. Those are surveys of much smaller companies, but they matter. I would argue they might matter more because small business is the job creating engine, right, in the US. It's not Walmart, it's not Amazon, it's small business. And if small businesses are slowing, there's a good deal of confidence that large businesses will be slowing as well, despite Walmart's stock performance today. So, why do small businesses matter more? In my opinion, in this particular time in the economy, there's a company called Miso Robotics. Miso Robotics has a machine called the Flipper, and it literally replaces burger flippers. And White Castle is rolling it out to 100 restaurants, right? And it literally is an arm. And I don't know if you can see my hand, but the arm goes under the burger, puts it up, takes it down, and flips it in a set amount of time. And I would argue, since it's a robot, it does it more consistently. I know it doesn't take smoke breaks. I know it doesn't take days off. And especially in a business where I believe most, if not all, White Castles are 24/7. A great deal of them are. This will be a massive cost savings for a company like White Castle. And if you talk about minimum wage increases, this is the kind of result that you get when the minimum wage increase gets too much for a company to handle. You get the very large companies who can afford to automate those minimum wage jobs. They decide to. There's a point in time where the worker's cheaper than the upgrade to automation. And it looks like we might be hitting that inflection point, at least for fast food, where the automation might now seem worth it. So what does all this mean? All this mess of shit that I just said. We're tightening into this. And apparently there is a unconditional support for the tightening from the Fed. So somebody asked me today, do I feel comfortable alone in the recession camp? I said, I don't feel alone at all. First of all, there's a lot of people I know with me. And second of all, the data I believe is with me. So anyway, that's what I wanted to rant about a little bit.
Wavy asked, so Bob, you are saying job automation is about to take off?
Well, I wouldn't say take off, but where automation can be placed would be A, in big companies, and B, in minimum wage jobs where the job is easily automatable. If now I'm making these numbers up, okay, but let's say that minimum wage is $8.25 an hour. Maybe it serves a company well to just hire people to do it because automation is very expensive and it takes years to pay off between depreciation and savings on wages. But there comes a time when the minimum wage increases, whether by labor shortages or by legislation, that companies go, okay, this robot got cheaper and the people got more expensive, and the robot does just a good enough job where it's worth it for me to do that. I'd rather hire 3 or 4 robot technicians than 30 burger flippers per restaurant. So
Well,
I'm saying it's about to get more economical to automate.
And there's a lot of McDonald's now that are where you walk in and there's no order taken.
Kiosk.
It's all kiosks.
Yeah,
It's all kiosks, meaning if you don't use a kiosk, you're not ordering your food unless you're in drive-through.
But that's a lot of people just go drive-through now because they don't like the kiosks, especially in places that are still like sort of COVID freaked out, where they don't want to touch the stuff.
Like here.
Yeah. In Florida, people are licking the kiosk screen, but I understand it's different in other places.
I mean, I'm seeing people drive down the street in their cars by themselves still wearing masks. Okay, come on, people.
A buddy of mine in New York lives near a middle school, and he saw a kid walking alone near the Hudson with a mask on by himself, no one around him. Little kid, like 8, 9 years old. What's middle school?
Yeah. Hey, good afternoon, Sashi. Hey, Connor, happy Thursday. Hey, Davey, how are you doing? Let's see. I'll have to jump back to Waka Waka says job opens are the wrong type.
I don't know what he means by that.
1 or 0 hour jobs, not full-time jobs with the right pay.
What does 1 hour or 0 hour jobs mean?
We'll have to get back to that. Kalani, hey, welcome. Bob, saw you on TD Ameritrade. How many jobs do you have? And what's up with all the selling in crude?
I don't get paid for my appearance on TD Ameritrade, so it's not really a job. The sell-off in crude is in part the recession story. It's actually mostly the recession story that's driving it from a fundamental perspective. Also, the Iran has made some concessions that there's starting to be talk of Iranian crude getting back to the market. And then lastly, there was a story that came out a couple days ago where they basically said Russian crude is not off the market at all. Like there's not even a barrel that's off the market because China and India in sort of after the fact reports that come out, these shipping reports, have bought basically every barrel of crude that Russia has imported. So they're saying that the shortage of crude due to the Putin price hike isn't actually due to Putin, I guess. I don't know.
Wavy confirms that all the fast food places around him also have kiosk only order and no cashiers. John, is it true the recession is a positive thing for the markets in the short term? Is that why we see a rally?
It's positive in that the Fed might get less restrictive if we go into a recession. So that's what would make it positive. But no, it's not really positive in and of itself. In a vacuum, it's not positive at all because a recession means lower earnings, right? Price to earnings ratio in that particular case would suffer, but prices are suffering. So,
see, it's interesting because I still get that talk. Well, they're going to start, get a couple more hikes in, then cutting sooner rather than later. I think they're really focused. They'd actually destroy their credibility now if they pivoted too soon, because with the amount that they're saying. So now,
that's actually what I said it on this. I'm sorry, thought I said it on TD Ameritrade, but go ahead.
If they pivot too soon now, like, oh, wait, looks like recession, we're stopping, then they've completely blown their narrative that they've spent literally this week reiterating multiple times.
Yeah.
So that's where we sit from my perspective. And this is also just, John, from my perspective, this is a bounce from a very deeply oversold rally, deeply oversold sell-off going into quarter end. Does not surprise me. So yes, and then you get to when you're in a recession, generally the market does bottom while you're still in the recession, and then you get a rally. That's why people say, well, the recession means the market's going to rally. Well, we haven't even announced a recession yet. The market could fall for a bunch more months. We're in a recession, and then, it's in the recession because it's forward-looking, going to come out. You're welcome, Dr. Michael. Hey, Eric, let's see. Bob, when I see you on CME Twitter, I always think you're famous.
I am famous.
He is famous. What do you mean you think he's famous? Recession arc is flying. What recession? I also said, remember, look at junk in this rally. Junk because it gets squeezed, and if you want to make these quick little things, once the junk stops rallying, we will be closer to the bottom. Mm-hmm. But the junk, I said, look at mega caps and junk for this rally, and we're seeing rallies in the mega caps and junk. Waka Waka answered, it's a job, but it's when the employer calls you up on the day to say we need you in. It's what Elon wants, 1 hour contracts, and UK being going through 0 hour contract.
Waka Waka, I don't know if there's 11.6 million of those jobs. I don't know that that's accurate. It doesn't really fit in with somebody said in here, by the way, that they're booked out for 6 months in home improvement but can't get workers, and the manufacturing jobs, signs of the manufacturing jobs. I know a company here, God, I forget the name of it, but they're a surgical manufacturing company. It's like Anthrax or Anthrax or something like that. I'll have the name next time. I got an email asking if I wanted a job. So I'm like, I don't know, maybe. And I opened it up, and it was literally, there was 13 different manufacturing job listings, postings, actually 18 in Atlanta, in Fort Myers, all in the sort of southeastern states. They were manufacturing jobs. So I don't know that they're all those jobs, Waka Waka. I certainly don't think there's 11.6 million of those.
And I still see the labor market as tight. I mean, the people who spray mosquito shield, shout out to him. He subscribes to the channel, but sprays my property for mosquitoes is having he's actually paying decently for the type of job it is, and he can't get good applicants. He literally, one guy lasted 2 days and quit, and then he's like, I can't find. I pay for these job posting boards, and I can't get qualified applicants for mosquito spraying. He's like, he's doing it himself. He's the owner. Do you think GDP will print negative again?
I think there's a high probability, but I'm not willing to say that it will. No. I don't. I'm going to go with no. I'm going to think it's going to be in the low single digits.
Bear better than beer. That's hard to say. Bob, what happened to Natty Gas today?
So that's you guys know that the EIA releases the natural gas storage report on Thursdays. If you don't and you watch natural gas, you should check it out. Basically, the report printed a build of 74 billion cubic feet, and the market was expecting 63 billion cubic feet. So it was a much bigger build of natural gas supplies, smaller than the 5-year average. For this time of year, the 5-year average is right around 82 billion cubic feet. It also increased total supplies to 2.169 trillion. So it increased total supplies, and the build was bigger than expected. So it was a very big drop off.
I'm expecting Natty Gas to hit the, even on rallies, to roll over and do this 50% retracement unless something really bad happens.
Yeah.
Let's see, where do we sit? So do we go to the moon from here? No.
No. This is a bear market rally. When does it change? It's not a bear market rally when we reach new all-time highs. So be very careful.
Ferrari Bob is super famous. There you go. Ferrari Bob. Let's see. Is crude going to retest 198 before going up again? Is crude oil bullish if President Biden passes the summer discount policy?
Well, demand will increase if the 3-month holiday on the gas tax is taken away. Demand will certainly increase. So you could get a little spike there, but I don't like the chart right now. I would ask Mike where it's going to retest.
Well, statistically, I have it retesting. It should retest this low area statistically, since we have gotten the. It looks like we're going to get the daily close below the 62.5, which is stronger than even the 4-hour close. So the probabilities go up with that. not guaranteed, but very decent probability. Let's see. Yeah, Kansas Fed Manufacturing Index -1 versus previous 19. That's what I talked about in contraction. What else? What other questions do we have for Bob? I'll have to take a look at the charts with Bob here. I just want to get Bob's time on so everyone can ask him questions. What else do we have? Oh, thanks. FedEx sees 2023 adjusted EPS 2250 to 2450, estimate 2236. Thanks. I'm waiting for questions. I'll just throw up that chart because we talked about we had a potential double top. Obviously, now it was already up post market, but it's going to probably be in a triple top territory. Now, if it collapses overnight, it's still valid because we don't use the after hours data. But that's where we sit with that. Thanks, Bob and Mike. You guys are the best.
Thank you.
There we go. Isn't people just going to fill up and stock up on the cheap gas? All right, let's just say they do a federal gas tax. Let's say the states or some states participate, others don't. What's the federal gas tax rate, Bob?
It's going to be right around 30 cents on average. It's not that much.
So
now, some of the states may join in. So that's where you get these big variations.
Yeah.
So it's probably in a lot of states. Where is the average as of right now? I think we're back below $5. So in some states, it could even drop it below $4. Let's see. The average gas price as of right now, $4.94 as of today. So it'd drop it down to about $4.60 or so on average. And then in some states, because it'll be lower and then maybe the state participates as well, it can drop it below $4 back in the $3 range. But that's exactly what I think it was John that said it. Maybe it was somebody else. That's why, again, like the spike, the demand spike will be there, especially because this is going through the summer driving season. So,
yep. Wavy. So, Bob, final question. Are you long equities?
I am not, no.
John asks, what's your overall opinion? I'll just go with overall opinion on the Jay Powell testimony.
I think Jay Powell's testimony was very much like a little kid standing at the edge of a high dive and yelling down, "I'm going to do it. I swear I'm going to do it. I will. Watch me. Watch me. I'll do it. You dare me to do it? I'll do it." That's really what kept going through my head, is that he's really trying to convince people that he's going all out on inflation and that he's going to keep pushing and harder and harder on that brake. I'd be surprised if he did, but he certainly has my belief right now. I'm going to act as if he's going to keep pushing at it and that the other data won't matter to him, that just the inflation data is going to matter. So we'll see to what level the inflation data matters because, again, Mike and I have mentioned this multiple times. I mean, what's it going to get to? 3? 3.5? That's hardly low inflation.
Yeah.
And by the way, that's an inflation growth rate. So that doesn't mean things go down. I mean, imagine if gas prices were rising, I don't know, at an 8% rate per week, right? And then they hit a $5 average. Now they only rise at 3% per week. Feel better? Still rising. So
all I know is I had to fill up the card
again. I'm such a believer in the recession camp. That's why I'm such a believer in a recession coming.
Yeah, it's hurting. Although gas prices here were 30 cents a gallon cheaper than my last fill up. Yeah. But still, it was $5.65 a gallon today. So it was not.
I'll let you know. Last time I filled up my Mustang, it was $85, and the last time I filled up the SUV, it was $95. So I'll let you guys know what it is next time.
Paul asks, does market always capitulate before a new bull market can start? Any examples when this has not happened in the past?
I don't put that more to Mike, but certainly you could have just a long bottom without capitulation.
You don't need a capitulation to. You can have capitulation rallies within a long term bear market. but you don't need the final low to be a capitulation low. Not at all.
Right.
2000 the 2001 drop, with the Nasdaq didn't end. It had capitulation rallies, but it sort of just fizzled out at the very end. Uh,
I am tired.
Bob looks tired. This
I
has
didn't
been
sleep really well.
these are been
My
these are
wife,
tiring markets though. I mean, I'm exhausted. I get up and like 30 minutes after I'm doing my morning recap, I'm already tired.
yeah, I didn't sleep well at all last night.
It's
So
it's this is when it finally does end, we get into a new at least a more stable market. It'll be a little sense of relief at some point, just because you don't have to pivot on the dime every 10 minutes. Uh, as for the kid on the edge, that is him in his chair saying that not even on the bridge, huh?
he hasn't even climbed up the plank yet. Is basically what I think he's saying there.
Uh,
Hasn't even climbed up the high dive yet. I think George's comment there is pretty funny.
I have 10 gas cans ready for the tax drop.
That's a good one. I like that.
You're gonna see that it dropped that for one day, and then it'll be back up due to all the demand, and we're gonna run out of gas then because everybody's gonna go.
Yeah.
I'm gonna fill up everything, and then it lasts one day. It's sort of like
Yeah.
the Strategic Petroleum Reserve releases. It helps for about 2 hours,
Oh, it's ridiculous.
and then we're
All
rugged
right,
running
guys.
out.
I got to jump.
All right, thanks, Bob.
All right, guys. Anything exciting happens tomorrow, I'll jump on in the morning.
All right, have a
See you
good one.
guys. Thanks.
Hello. Oh, there, small little Mike. Small little Mike. So, all right, what did I meant? Let me go back to, let me get, there we go. Is that a bear flag on 1 hour nat gas chart? 1 hour. That's not really a good flag. That's just a sort of a horribly formed horizontal. It's not even solidly formed. You can see it on the 15 minutes as horizontal. It's a horizontal channel. This is not a flag. That's just a horizontal channel. So as long as you don't really break above about 635, you're still with the declining rotation zones. You can't even call that a double at all. So that's just a horizontal channel. So that's where that sits. But any rallies at this point, even rallies back to the breakdown zone right here, about $7 would be potential sells for this to get down to this key area. RBLX. Still needs a bit to go. It's sitting right against this key resistance. You start getting above that. 50 is an area, remember, but you still have this. If the market does, if the Nasdaq keeps pushing through, this would be at least an intraday breakout play. Why wouldn't it be a longer term breakout play? Because you're still with this again. You have this horizontal channel. You have resistance right here. So there's still a lot of stuff to chew through above here. There's pretty substantial resistance. Now, if it does get a big momentum play, it would be an intraday play. If you got then a close above about 34.65, I'd be willing to run it a bit higher and aggressively raise a stop going into quarter end. Let's take a look at some other stuff. You think we see a gap down tomorrow, move up today made no sense based off hopium of recession. Fear recession is 1,000% worse than inflation. I think everything's going to pivot tomorrow off consumer sentiment. That's because they are paying attention to consumer sentiment. So remember, tomorrow Didn't go through this yet. 9 a.m. There's nothing before the official market open. But 9 a.m. you have consumer sentiment and consumer inflation expectations, and you have some home sales stuff out. So 9 a.m. is going to be the big pivot. That's where it's going to sit. Mike, when are you going to do the next Mike's Crazy Classroom episode? I don't know. You know, when I do 2 to 3 of these a day plus other stuff, it takes a while to put stuff together. Uranium, I'm watching for this low in here because we got back below that 62.5. We tested it once. We're coming back down. This is the key support area. I just don't have a decent buy yet. But yes, long term, I'm still very bullish. The energy crisis overall in Europe's not going to go away. They're reopening coal plants. They're being a little stubborn on uranium. But uranium's a very strong long-term bull play from my perspective. I'm watching for this. If it does break down, my next key, it's hands off. If it breaks down below this low, and this got into way too sloppy for a head and shoulders. But the next key area, if it breaks down below 17, is I'll be hands off till 1549. But the trick is, it gets interesting if we do close below 1629. So this is being very patient, but yes, still in very long-term bullish mode. Let me get through some other stuff. S&P. I was watching to see if it was going to close in the rotation zone. No. Tomorrow, the upside play is what I'm watching for, is a break above about 38.05. Again, 2 tops, not a double top here. Why not a double top? It's not reversing a big enough move. It's only reversing this move with this decent pullback. And the breakdown zone for me is about 37.45. So it's a breakout or a breakdown play tomorrow. That's what I'm watching for. And we can fine tune that tomorrow. But this was a very back and forth day today. Which really went, it was almost an inside day. It missed by 1 tick being in, but I consider it as consolidation and still holding with the rotation zone. I'm still favoring a move up. NASDAQ actually closed in its rotation zone, so I'm actually looking over, not necessarily tomorrow. Now, if the consumer sentiment numbers come out absolutely horrible and the market tanks, and we could be all bets off, but then if you watch the 62.5 retracement level. But on any rally, especially next week with quarter end, I'm watching for a return to the other side of the rotation zone in the NASDAQ. That's what I am still focused on. But again, this is very tactical trading. It's not just sit back and take it easy. And you see there's a fair amount of selling pressure still in this area. But if it can really get a move on above about 11,745, you could see a nice little run to the gap fill and then an easy run to that 12,000 area. And that's, again, not just for tomorrow. Where else? There's just not much. Notes were great today. Finished the double pattern. I wanted to get to that. And there were actually momentum bars. There was some great momentum in the notes when J Powell was speaking. Some takeoff. Then we got the double top. So you see that was done. Then you got the double top with the pullback. Just wanted to point that one out too. So overall with the notes, still we've completed those patterns. Going to watch possibly for a slighter pullback play and then a resumption of trend closing just below. This is why you always got to watch something on the closing basis. Closing below the 50% level and right below this breakdown level. So that's why I'm starting to watch for a slightly bigger pullback and then a resumptive move back higher. and we've hit remember the weekly rotation zone is been hit. So this is the first reaction now off the weekly rotation zone. So as long as it does not get a close below about 115.24, I remain in short-term bullish mode on any pullbacks. Dollar index still in consolidation inside day today. Look at all these days since the big day on June 16th. Now I'm referencing that day because all these days are inside days to June 16th. So we're in this major consolidation pattern. If we start breaking down, I'm watching about 103.60 at this point, which is right around yesterday's low. A breakout, I need to get above yesterday's high, 104.73. The VIX, very neutral day. I think everything's just waiting on those sentiment numbers tomorrow. What else do we want to talk about? Let's see. Can I check TARC? Yeah. I mean, it's just a 2 times the fun. I mean, it's really you've checked those boxes off. Your next major resistance would be 24. Other than that, not much going on there. I mean, ARC, we've completed that double bottom pattern, which completed, got the close above the 62.5. So I'm still watching over the next through quarter end for us to statistically run to 45.47 to about the 50. That would be my next 2 targets, even with a pullback. We filled this gap, hit the 75, closed above the 62.5, so statistically we favored a higher prices still. Do I like it long term? No, but it's a trade, not a, remember, we're looking for trades, not things to invest. By the way, Microsoft triggered the double today. It confirmed it yesterday, but triggered it today, so I'm going to be, this is a play through quarter end too, especially with the 50 EMA. Closing right at the daily rotation zone. But I said, remember, watch mega caps, and mega caps are attracting some money. You see Microsoft 2.26, Apple 2.16, Google, Meta actually bounced a little today. Amazon 3.2. So you have those plays. Walmart. I mean, I tried to highlight a number of these things. Walmart talked about, we got the aggressive buy this again. Now it's back to the 50% level. You still have a gap left behind, slightly higher on a rally. You get the close above about 125.50. Then I start targeting even higher prices with Walmart. So that's one I did highlight also. Do I see a head and shoulder? Did somebody block these other comments or report them? You know the ones I'm talking about. Do I see a head and shoulder on the 1 hour Bitcoin or inverse head and shoulder on the 4 hour? That's more of a horizontal channel breakout. It's very sloppy, but I would really, my next play for this, let me check one thing here. I didn't look at it this afternoon. So we don't have a potential double yet. The only thing I'm watching on this is if we do break above, we're stalling out at the rotation zone. You see, let me see, we're stalling out at the rotation zone. We really start getting a move back above about 2100 with some momentum. I'll start targeting upwards to about 22.6 first target. It's at this point, it's either a breakout or breakdown play, and the breakdown play would be below yesterday's low. there's still lots of stuff going on behind the scenes with the some bailouts going on. So, and then if we continue to rally, about 23.7 is the next target. But I need to either see a breakout or breakdown play for that. Palantir did the breakout play, filled the gap against the 50, closing in the rotation zone. So the next target up would be about 1061 on a continued move up, closing in the rotation zone. So that's the next area. And then above there, and that's pretty major because that's also the breakdown zone and the 50% retracement. So that would be the next short-term target on a continued move. The only thing that really I just do your gap harmonics on here for the, if it is going to be the pullback. But this was a little double also. So you had the pullback, and it's reversing this move, so it's completely valid even if you did the aggressive targets. So that played out. And that was pretty much only because of the gap up for an intraday trade. But other than that, you might see it's all going to depend on what that sentiment number does. If we continue to rally tomorrow, this could be another continued breakout play. Next major target up here at the 50. If we tank, I'd watch for that gap fill. And if it holds support at 824, still could be a play next week if we get a rally into end of quarter. What do I think about copper? Well, copper broke major support. So at this point on any rally now, let me fix some of these levels. Because this is, again, we hate the term Dr. Copper, but this is now turning into a slowdown recession play like everything else. So any rallies back to about $4 to 405 would be potential sells. That's where it sits for copper. The next target area for the downside, you see this support base. Your minor level. Minor support is just slightly lower than where you're trading now, about 369. You break there, target 349. So that could, if you were short, the only play right now is to the short side right now. That was a weekly chart. So even on a snapback, if it does snap back, I'd just be focused on the daily and the 4-hour rotation zones for rollover plays. And again, your short-term resistance even before $4 is 386. This little support ledge that was broken, that would just be a return to the rotation zone on the 4-hour play. So this is now rallies until something changes, rallies to be sold, and there's no bottoming pattern yet. No bottoming pattern yet. So yes, can you get snapback rallies? An aggressive buy would be above today's high, but that would be, you'd have to have a pretty substantial change with something to happen that. So that's about it for copper. Longer term, I'd be watching the 50% and then below that to 200 week, and that's to see if it can get a bottoming pattern in here on a longer term basis for a bullish play. But I don't have any safe or safer bullish plays at this point. It's only bearish plays. Will I do OXY? I mean, right now you have key support about 54.35. If you break down there, you go into a, you break down there. You really need to, that'd be the first minor area, but then major would be about 51.73. You get below 51.73. and you could rapidly return to the 200. So if there's continued pressure on oil, it's a breakdown play, and longer term, if this does get a bounce and then a rollover, you could have a sort of a sloppy head and shoulders, which could even lead to a bigger pullback. So I'd be very cautious from the long side now, and I personally would have a tight stop for especially a close below this key level. And you could watch this for tomorrow with the weekly close. You get a weekly close below that level. See, that goes into a weekly clear path move all the way down to this prior breakout area. And that prior breakout area is right by the 200. So please keep that in mind. On any bullish move, I'd just be watching, because that was how you get that larger head and shoulders on a weekly basis. It would be a return up into this weekly, the daily rotation zone area, and then the rollover, which would then pretty much confirm a head and shoulders pattern. Apple. Now remember, long term, I'm still watching for the next rollover play. Short term, we got the aggressive buy back on the 21st, and I'm still targeting this point. I'm targeting the 200 first to at least raise a stop 140.25, and then through quarter end a possible gap fill back to 142.64. Why raise a stop? Because you have this key hot open and high from this gap down right at the rotation zone, and then so that's definitely an area to raise a stop, and then the gap fill play. If it continues above there, and a gap fill play would be for me to unwind a partial position, and depending on how strong it is, it could potentially be into quarter end. Your next major target would be the 50. Now, what invalidates that at this point, because you got to plan on both sides based off these markets, even with it, would be a close below 132.50. Let's just call it 132.50, not 60, right around there. Why? Because not only would you be breaking back, you could even cheat it with a tighter stop below this, right below this low from the 21st. But you start getting back below there, you still have a gap fill to the downside, and that close below the 62.5 would then refavor a test of the low area. And then as it moves up, you ratchet up these levels to help fine tune your stop. And it did close above. Also, let me just take a look here on the weekly. Fine tune it on the daily. Yeah, that's pretty much close. So right about there. So you got this, or it already filled once, but you got now the first close above this gap that was left behind. So it closed above this key resistance that was rejected here, rejected here, rejected here, now gets to close above it. So I'd lean, unless something disaster happens tomorrow, I'd be leaning towards the continued bullish play. Again, it's a mega cap, and I like the mega caps going into the quarter end with their positioning. Another thing, by the way, Google, I didn't touch on this, but it did trigger the double, gave multiple chances to get in, and now it just, even with this doji day, it closed above the flattening daily rotation zone, so I'm still favoring that. 22.84, 23.10, and then I would use the 50 as the next target. It'd be a target zone depending on intraday price action, about 23.27 to about 23.39. Yeah, XPEV, by the way, triggered the bigger double pattern now. We haven't covered this in a while, but it did have this smaller double pattern which ran to completion, and now it's triggered a bigger double pattern. So it's still running. And NIO getting close to triggering to get to that final. Even on a pullback to fill this gap, it's still almost that final smaller double or the smaller inverse head and shoulders pattern. And then you still have a bigger double pattern on that too. Yeah, just remember that month end and quarter end next week. They're trying to get some window dressing on, especially with this quarter. You are welcome, Wavy. You are welcome, Anissa. Coco thinks the market will rally to the next CPI. I mean, what's most important is quarter end next week. Thank you, John. Thank you, everybody. I'm running out of energy now. But I will be back on tomorrow at 8 a.m. And just remember for all your positioning that the very important number comes out at 9 Central. So don't get caught off guard by that. We'll take a look at the overnight price action tomorrow morning and help fine-tune our plays going into that number for tomorrow. With that, everyone, again, have a fantastic night. Thank you for being here. And if you are new, please do consider subscribing. Talk to everyone later. Bye.